Good morning, traders and investors. Welcome to Tuesday's edition of Benzinga's Pre-Market Prep, brought to you by Options House. Joe, how you doing this morning?
It's a great day in the D, Joel, aside from being freezing cold and still winter.
Yes, yeah, it still is. So, how'd everything go yesterday with me out of commission? How'd Shaky Jake do?
Oh, you weren't here? Oh,
I didn't even realize
none of
Joel
us
wasn't
even
here.
noticed.
That's
Huh.
shocking. You weren't here, eh, Joel?
Oh yeah, I forgot that mouth breather wasn't on the show all day yesterday.
Darth,
Or the
Darth,
yogurt slurper.
Darth Vader. Darth Vader took the day off.
Darth Vader had the day off. How you feeling, Joel? You all better now? All
Well,
better?
Well, Dennis, I am feeling better, but I tell you, I've had more than my fill of the Olympics, and I had a question for you. I was going to give you a call. I didn't want to bother you, but I watched 2 hours of curling. Okay. And and I still don't know how it's scored. So could you please tell me the basics of curling?
Throw the rock down the ice. Get it as close to the center as possible. That's the
Well, I
basics.
was gonna say watching all of the curling made me an Olympic gold medalist and cringing. I've never been so good at being bored in my whole life.
But
You guys are all just jealous because Canada is winning. We are winning the Winter
Simply the
Olympics. We have
best.
9 medals. 9 medals. Four
what,
gold
So,
and
Dennis,
9 medals.
per a Benzinga.com missive yesterday, what does 9 gold medals do for Canada's
Well,
economy?
actually, it's only 4 gold medals, but they have 9 medals total.
Oh,
But
okay. So 4 gold medals. What does that do for Canada's economy?
that's everything for the economy. Everybody wants to come to Canada to see those gold medals. So it proves everything, man. It's all about Canada right now. This is unbelievable. We're legalizing pot. We found out yesterday, and now all of a sudden we're leading the gold medal charge here. Canada's where it's at, boys.
Boy, we know where your priorities are at.
Oh, look at this. Oh, yeah, I'm all
Triple.
patriotic here up here right
Wow.
now.
All of a sudden, Dennis got a personality. Was I gone for a day, huh?
Yeah, that's it. I'm in. Shuffleboard J Dot's talking about. Isn't that mobile shuffleboard on ice? It
I,
kind of is, actually. I
but,
actually always like shuffleboard, too, so I guess that's why I like curling as well.
but
I
you
never really.
seriously you don't know the scoring? I mean, is it mean like if you only get one of those little, what do they call them? What do they call those things? Stones. Like if you get one stone in the
I,
middle, does that rule out all the other ones on the outside? Is that the way it works? Because I kind of no. Brent's shaking his head. No.
You can I forget what the technical term is, but you can knock out other stones as long as they get outside of the color bands. Then there's no points. But if you like knock an opponent's colored band into a higher valued band, that's your bad.
But the
yeah,
the most the
you got this
bands in the
figured out
middle
there.
are the most.
Yeah, I
Yeah.
think it's like I'm guessing, but it's like 5, 4, 3, 2 maybe.
Okay. I
It's
just
all about
thought.
those last couple of rocks. The
Yeah.
last
Oh,
rock.
well,
You
I
got
know
the
what
hammer.
the hammer.
Then you
Right. I got
clean
that
the
turned down.
hammer. Then you clean them up. So you get that
Okay.
Kevin Martin guy out there in Alberta. He's the best.
Okay.
Anyways, we got J Dot. He's excited because he just found out about the legalizing the pot thing, and he's packing his bags and moving to Canada. Welcome to Canada, J Dot. Welcome to Canada.
Hey.
S&P futures, 10-point range here, Joel. Overnight, we're up again. Cannot keep this market down. We were flat for a day when that was it, and now we're starting to rally here again. Are we going right back to those highs, 1846, or are we going to pause here?
Caught a little bit of in a vacuum area when we came down off that 1828 high back at the end of January. So really, you have the high of 1804.50 pre-market. That's really your only identifiable resistance here, as well as the average daily range. So we are creeping right back up. I did chat with you a little bit yesterday in the morning, and we were pausing. The financials did look weak, but if there's financials are weak, there's something else to pick up the slack, and that's certainly what happened. Back above 1800 here. Not looking for any kind of a sell-off until we come back down below the close, 94.75, which coincides with the pre-market low at 94 and a quarter.
You know what's interesting, picking up the slack here too, is gold. The
Hmm.
market rallies and gold rallies too. In the last week, gold has been positively correlated to this market. Usually when the market rallies 75 S&P points, gold will sell off. Not the case. The gold bugs are back here and they're buying this thing every day. We're up another $12 here on gold this morning.
What do you think about that? I mean, is it really, there's really no international turmoil going on. There's just people looking to put their money somewhere else here. We are breaking out above the 1280 level. You did have a like that 1240 to 1280 range held for a couple weeks. Now you're breaking back above 1280 here. You did have a high in the gold market, 1293.60 and 1290.60 back in mid-November. Haven't quite got there yet. Got to 88.30. That's your next identifiable resistance. But boy, it's tough to trade this gold because you think, right, a sleeper rally in the market yesterday. You think they'd hit the bullion.
Yeah, they're not though. They're just rallying. They're buying everything. They're going out there. They're looking for value here right now. There's a few stocks that have been lagging, like we were talking on the show. Goldman Sachs, ExxonMobil haven't been participating, but a lot of stocks have, and it's interesting. It's almost hard to gauge which ones are going to participate because you'd think the miners would be weak, you'd think gold would be weak, and it's just not the case. Look at that AEM chart of Aneco Eagle Mines.
Oh, yeah.
That thing's rallied from 31.27 2 sessions ago. It got up over $34 yesterday. It got up to 34 and a half. It's just been on a tear. This morning, it's up another 50 cents. It's trading 34.96 right now. Actually, that's up another dollar. I don't think it's going to open that high, but it's bid up at 34.66. This thing is just a rocket ship.
People just looking to put their money somewhere else. Did you wiggle out of that Newmont yet, or did you
No, I'm still in it, and
you
you know
still
what? I'm still not liking that one. I've chose the wrong gold stock. That's a bad thing, I guess, when you don't buy the bullion itself and you go and you pick individual stocks. And I chose the wrong one here. Actually, Newmont's I'm only down about 50 cents in it now. I probably will wiggle out of it here because I don't like it that it made a new low, and I don't like the fact that gold's taken off here, and this thing is obviously not making new highs. When you look at the charts of GG, you look at the charts of AEM. That's what you want to see. Those are the ones you want to be in. I'm obviously in the wrong one in that one, so I think I am going to wiggle out. Again, that was an investment, not a trade, but I'm not even liking the investment as much now. I bought that for you, Joel. That was always your favorite one, NEM. I picked the wrong one.
J Dot just hopping in here from Yahoo Finance, trying to poise to grab the gold bar. So maybe you got a little bit of flow from the Chinese into the gold market.
Also, crude, which we haven't talked about for a couple of days, is now back over $100 here again. We're trading 115 this morning here. This has been a little sleeper rally too. Got down to $92 a month ago, and it's back. It's back up to 100.
Yeah, back up to where we started the year. So we'll see if the current resistance here. What I don't like about the chart is the potential double top here at 10049 and one. That's from today's session, and then 10055. Interestingly, the high on December 30th, 10056.
Ooh.
Yeah, a lot of resistance here. Big rally. You had to pause at the $98 level. Sure would like if you're long the black gold here. You need to get above this 101 area and another rally. Strong rally though. Perhaps we're going to have a little bit of the consolidation that we did going back last week or so. We had that consolidation, then another move up. We'll see if we have another consolidation here, and then perhaps a little bit of correction here in crude.
Let's fly into a couple of these earnings stocks here. We'll highlight some of the main ones for you. CVS reported earnings here of $1.12 versus $1.11. 32.8 billion versus 32.67 billion. So a small beat on the bottom line, small beat on the top line. They're raising guidance $1.03 to $1.06 versus 98 cents for next quarter. And the stock is trading up here sharply in the pre-market. It's trading at 68.50 right now. Went out at 66.94. That put it up $1.50.
So all of a sudden they've forgotten about them not selling cigarettes anymore. It's like it's
Yeah, they've forgiven them.
it's
They're
not it's
forgiven
not
for
it's
the
not a big
nonsense.
deal anymore.
Yeah, I guess not, because they're popping it up here in the pre-market. So they like the earnings and like the guidance, and they're like, oh, look, cigarettes aren't even going to affect it. They're raising guidance for next quarter. Let's buy them. That's what they're saying.
Okay, let's first of all, let's just take a look of what CVS is doing here in the pre-market, and you have just made a pre-market high here at 68.61 and 68.66 here. The stock did have that. I believe it made the low in the move on the day that that announcement was made about not selling cigarettes anymore. Now the stock is battling back here. Looking at the charts, not much resistance into 68 handle to keep an eye on. He did have a couple tops around 68.10, but we are through that level. The next major resistance to me is 68.78. That's another 78 cents away from here, and that was the high on January 28th. But CVS bouncing back.
Walgreens, might as well talk about that. I don't know if you're going to see much of a sympathy move because this Walgreens has been on a complete and utter tear. This stock put in basically a double bottom back at 55.27, almost on at 55.30, 4 trading sessions ago. It's over $60 now. It's just been straight up ever since they said that CVS isn't selling cigarettes. So I guess they're all going to buy them all at Walgreens. And holy cow, this thing has been off to the races.
Wags, you're right. Oh my gosh, those are one, two, three
Those are
months.
huge bars for that stock.
Yeah, that you don't see that very often there in Wags. But what traders should be alerted to in this issue is the highs from Friday and Monday. 60.93 and 60.96. You also had the close there Friday, right at that level. Is there someone kicking around at the point there, Dennis? Do you
Let me
see?
go check it
Did
out.
you notice?
No, I doubt it because we went through there. We went through there yesterday at 60. So
Yeah, well, it we went up to 61.19 and 61.33.
you're looking at 62. Is that what you want to see? Or
No, 60. I mean, we didn't go through 61 yesterday.
yeah, no, there is 17,061. So there's a little bit of stock there. Not a huge amount of stock, but a little bit of stock. Yeah.
Well,
So
going
it's,
back to also in mid-January, you had a couple highs above that level too at 19 and 61.19 and 61.33. So someone is targeting that whole $61 area. Perhaps if you don't get above 61 today, you have a little bit of an inside day. I'd keep an eye on that, on yesterday's low, 60.14. Well, that's a ways away from here. Boy, what a big rally in this.
yeah, it's been just on flying here. Rite Aid really not participating. I mean, it's always kind of been the dog of the whole sector there. A few years ago, we kind of all thought that they were probably going to go bye-bye back in 2009 when the stock got down to like 20 cents. It's come back though, Rite Aid RAD. It's up at 564. What do you think of this chart? We've had a massive amount of consolidation here in Rite Aid, basically for the last 3.5 months, trading between 5 and 6. You think if this thing, could ever start grinding its way back up to 6, this thing could continue to rally, or is it just too the
I don't know. It's
fundamentals
kind of
too
in the
bad
middle.
there?
It's just kind of in the middle of nowhere here. I really, I mean, I'd rather look at the support here. 526, 523. As long as it holds there, I think it's good to go on the upside. But this thing's pretty volatile here for a little stock. We did stop at 596 back on the 17th, so I don't think there's. I guess it'd be better off to hold the big guns than than try and get this Rite Aid to move.
Yeah, the big hole numbers really come into play when you talk $5, $6 stocks, especially because of options on those strike prices usually too. Sprint reported earnings. Speaking of big stocks with little prices, stock is trading up here significantly in the pre-market. They lost money. It seems like they always lose money, 26 cents a share. But the revenues were solid, 9.14 billion versus 8.69 billion. So they beat nicely on the top line. And Sprint's flying up here in the pre-market. It's up almost 50 cents. Actually, it is up 50 cents right now. Just ticked to 819, went out at 769.
Here's a stock that you could have pretty much purchased really close to the low in the entire move yesterday. 750 low, 742 has been the low of the recent move. Now you're getting a pop up on earnings here. A little bit of resistance here. I've seen a couple last bars here in the last hour or so. Someone has a little bit of opinion here at 820. We're not really backing off from it, but it is acting as a little bit of resistance. If you go back to the high that you had on Thursday, you had an 823 high, so that confirms it. So let's see if we can open up, bust through that 823 level. 818 high was a high on Friday, and then I think you got a chance to trade in the upper eights. But getting a big jump off the open, let's see if you get some follow through.
Mosaic MOS reported earnings here too, and the stock is trading higher. They actually missed. This is an interesting report. They missed big time, 36 cents versus 51 cents. But they are announcing a $1 billion stock buyback here. So that might be what's trying to propel the shares higher here in the pre-market, because you'd think with that miss that they knock it down. Not the case. Stock is trading right now at 47.20, went out at 46.82, which would put it up about 1%.
These stocks have just had a hard time rebounding since the bad news in July. It seems like they get a little mo, and then they
Yeah,
get
then they
knocked.
get knocked back down.
Yeah, knocked back down here. But here's a shot. You're taking you got a running momentum at yesterday's high, which was 47.16. You've matched that and exceeded it in the pre-market with a 47 and a quarter high here. Looking at the dailies, you clear that level, Dennis. You don't have much up until the upper 47s, high at 47.81. So see if the Momo can continue here right off that opening print.
Also here, Conagra, CAG, they are lowering guidance here today, looking at 223 to 225 for the full year. Analyst estimates were up at 235. They also lowered the next couple of quarters the guidance as well. And that's knocking CAG down big time here in the pre-market. Usually a lower beta stock, but they're hitting and whacking it here in the pre-market. It's down $1.80 right now, trading at 29.23.
Is this one getting you excited on the buy side here at all, Dennis? This is a big move for the stock. 29 even's been the low in the pre-market session, so not liking what they're hearing out of ConAgra. You're going to have to go back quite a ways here to see when this stock is traded down at the $29 level. Did have that major support at 30, which held up on a monthly basis a couple times in September and October. Going on the monthly chart here, you had a low at 28.78. That was the low in December, so that would be the next
December 2012, or yeah, 20 was it 2013 or 2012?
Yeah, you're right, sir.
Yeah. We're going back a year here, so to get back to support. I mean, look at the 30 level. It was big, so if it starts to rally up here, probably that 30 could be a good swing number for you guys. And obviously, that's a big number, 28.78. I can't see them knocking this thing down like another dollar here, Joel. These food stocks, usually people come in. Dividend at the closing price of 31.05 was 3.22%, so that'll be a little bit higher there too. Value investors usually do come in this stuff, so I don't think it's going to continue to slide here too much farther. You know, maybe we could get down, test that low. You're talking about 28.78, but I can't see it taking that out.
Hey, I'm also watching some action in Dean Foods this morning. Another one of those foods. It's DF. They had Q4 results. I'm sure it's moving a little bit on that last report, but also they had Q4 results which were worse than expected, and then the guidance was like really bad.
Dean Foods, yeah, I'm just looking at that too. That just broke at 8:01 just after we just started the show. And holy cow, the guidance there, Brent. What's the guidance?
Well, they missed by a penny on the Q4 number, and then the fiscal year 14 in the range, EPS in the range of 73 to 86, and the street's all the way up at 112. And then for Q1, expecting a loss of 3 cents per share to a gain of 3 cents per share, and I'm seeing a street estimate all the way up at 28 cents.
This is a disaster. The stock is down $2 more here in the pre-market trading. Well, I guess it's $13.49, so down $1.70. You're talking like a 12% whacking here, Joel.
I mean, I haven't been eating that much since I've been ill, but I didn't think it would affect these food stocks like this. Holy mackerel. I guess you just have to take a look at it. A lot of times when you see these extended moves in the pre-market, what you like to do is just keep an eye on the pre-market highs and lows. This just made a low like at 13.35, so use that as a parameter right now this early in the session. But food stocks getting whacked. Maybe, I don't know. It's been a while since Warren did that Heinz deal, so maybe that luster's gone. But boy, back to back bad news out of the food stocks.
Yeah, not looking good there for either of these, Conagra and Dean Foods. Tyson Foods not really trading here at all this morning. TSN, maybe keep an eye on that one. I'm not sure if you'll have a sympathy play or not. This one's been relatively strong. Wasn't this? There was other news in this too, like a couple of weeks ago when it was really popping up there. I'm trying to go look back at the Benzinga Pro to see. They did have earnings, which were solid, so they've already reported earnings, which were pretty good. Just trying to,
It was something. Did someone make a huge investment in them or
I
something?
thought so too. I'm trying to
Yeah,
remember.
that was.
Brent, do you remember? It wasn't Tyson. Was it?
Yeah, that sounds familiar, but I couldn't put my finger on it. There's been a lot of kind of M&A chatter on this one. Potentially selling Michael Foods. That would be like a big, probably over $2 billion deal. That was kind of the latest rumor. And then maybe you heard about the Bosco Pizza acquisition.
Okay,
Bosco
yeah.
sticks.
It's been in the news a lot. I don't know if we're going to get a sympathy move here or not. We're going to get Conagra down and Dean Foods down. Keep an eye on Tyson Foods, but it's been strong. It's been relatively strong. I guess it's best of breed there. Also, let's go look at Reynolds and RAI. You were talking about smokes there earlier, Joel. Well, RAI not getting smoked in the pre-market, but is trading down 77 cents versus 81 cents, so a slight miss. They did lower guidance 330 to 345 versus 344 estimates, but they are raising the quarterly dividend. So you got kind of a couple bad news, a little bit of good news. Stock is down 50 cents here in the pre-market.
Need to get back above 48 here. That was the high, very close in yesterday's session, and then going back at the end of January had a high at, or excuse me, at 49. So 49 is your resistance. You have to keep an eye on. Keep an eye on yesterday. We are through yesterday's low here, so keep an eye on that. If not, you're not going to find support until you get under 48.
Couple of stocks getting whacked from last night. Rax, first of all, which is Rackspace Hosting. Their Q1 to be seasonally lower and their CEO retiring. They're not liking either of those things, and the stock is trading down $5 here in the pre-market right now on 100,000 shares. So they're hitting this thing pretty hard. They were hitting it hard last night too. Joel, what was the after-hours low there on this Rax? Because it was really getting whacked.
The after hours low in rack space, woohoo, 33.33. That's a nice number there. You got a nice bounce off that back up to the $37 level. Consolidating here at 35. Just not a big fan, I guess, of this CEO retiring. So I don't know. We'll see what happens. They have to hold in here at 35. If you go to the daily charts here, whew. Look at all that support that it took out at 35. So if you do rally back, that is going to be major resistance. And taking a look, you had a low at 32.62 on December 9th.
So we are trading back above 35
Okay,
right
I'm sorry.
now. So do you think that whole area can hold here? Now I'm actually looking at three lows at 34.50 and 34.60. This was back in December. And then just 4 trading sessions ago, we got down to where? 34.60. So I'm thinking in the back of my mind, even though we did take it out earlier in the pre-market, if this thing can hold above that 34.60 area, maybe you can try to find some life. But it is sketchy because it was obviously trading lower than that after hours last night.
I don't know what they don't like more. Is it, the news or, the CEOs retiring and stuff? It is a big drop for it. People that have been, riding the short out here between 35 and 40. Here's a gift. You're back at 35. I kind of like the $35 level, even though it traded below it in the pre-market.
Here's your big loser of the day. It is trading down enormous BLOX. It's down a cool 41%. It is your leader. There's nothing even close to it. Rax is second at down 12%. Block's down 41% right now. They lowered their 2014 guidance big time. Analyst estimates were up at 52 cents. They're looking 30 to 34, and they are whacking Infoblox down a cool 14 points.
Brent, do we know what this what sector this is in? It made a low at 1950 and really not getting much of a bounce at all here. Oof, boy. When you have to go to the dailies and to the weeklies here, 20 had been a major level in the issue back in 2013. We are below that. Brent, you got anything on this one?
This is another one of those network plays. So about in line with, maybe a riverbed, maybe a F5, even maybe like a little juniper. And let's see, 3 downgrades this morning following that downside. Wedbush, Needham, and Stern AG downgrading.
Whew. Okay.
Looks like it's going to be a tough morning here for shareholders of blocks. That is just ugly. What's the technical saying, Joel? Do you got any support anywhere on this thing?
I'm looking here at the weeklies, and you did have support here at 19, or excuse me, at 20.
Yeah.
We have taken that out here, so boy, I don't know. This is a tough call. I just had when you get things going like this, just see what happens. What that low is in the pre-market session. Right now, the low is 1950. Looks like it's about to go. Just made a low at
1945.
95. Yeah, keeps going. I mean, I just if you're short this one, you're looking to enter along. Just keep an eye on that pre-market low. That should be a good parameter. I see they're just hitting it with pretty small lots here. No major size. Maybe if you can, you wake it down to 19 and you see a bunch of big trades going up, maybe that'll be your capitulation.
But I mean, when a stock goes down 14 points, it's so hard to pick bottoms because a stock that goes down 14 can go down 15, it can go down 16, it can bounce back and go down 12 only. So there's going to be a lot of air. I'd imagine you're going to see a 3 or 4 point range on this, and when it comes to the regular session here too. So I think I'm going to wait till the dust to settle here. Unless this thing can open up around 20 and kind of hold 20, I don't like it below 20 because that 20 was huge. So I'm scared. I'm scared on this one.
Okay.
Lots of upgrades, downgrades here, but mostly downgrades, to be honest with you. Looking at U.S. Steel first, let's start with this one. They are getting downgraded to sell at Citigroup here this morning. The big S word being used at Citigroup, and X is trading down 50 cents right now here in the pre-market. Just ticked to 25.07, went out at 25.59.
You're going to have to help me out on the technicals here. My chart's a little slow bringing this one up.
I'm looking just, it broke down here. It's obviously breaking down, but 3 days ago we got down to a low on the 5th at 24.47. That has pretty much been the low of the move. Actually, back on January 27th, we got down to 24.46. So that's the potential double bottom there. That's 50 cents away from there. But whenever you get downgraded to sell here, I think it makes a lot of people nervous. So 24.47, that whole 24.5 area, good support. That's 50 cents lower than here right now. It does look like in the pre-market, though, somebody's making a stand here around 25 bucks because 25.01 got some size there a bit. I'm not sure if there's more stock at 25 or not, but it does look like somebody's trying to hold this thing above 25.
24.79 was the low in the pre-market. Did get a bounce to 25.20, so just kind of hanging out here the last half hour between 25 and 25.20. Keep an eye on that 24.79 low. And then you did have the multiple lows in the market just under that $25 level. So despite the sell downgrade, still opening into support.
If you guys are talking on the steel sector real quick, there was 2 Bank of America upgrades this morning. Reliance Steel, that's Romeo Sandy, and then Steel Dynamics also got an upgrade. Both to buy.
STLD.
Yep.
So a couple upgrades in the sector, a downgrade in the sector. So steel looks like it's going to be mixed here today, the steel stocks. STLD is bid up at 16.63 right now, which would put it up about 30 cents. And Reliance Steel here, RS, went out at 69.14. It's bid up at 70 bucks right now, which would put it up about 85 cents. So a couple of the steel stocks do look strong. Brent, thanks.
Going in opposite directions here, huh?
Yeah, a little bit there.
Where'd you say the STLD was bid at?
STLD right now is bid at 16.63. Nobody's sniffing him. Everybody, the best offers up at 16.89. There looks like pretty solid resistance up there, just under 17.
Correct.
Because you have multiple highs there. So if this thing does go, parabolic here, pre-market or whatever, I think you're going to run into some resistance just under 17. There's probably somebody kicking around the point there. I wouldn't be surprised.
Can we check our old dog Alcoa lately? How's Alcoa?
Alcoa. Yeah, it's popping here this morning too. Brent, is there anything on Alcoa? Because it's up 20 cents here in the pre-market. It's a stock. Obviously, it's had a pretty decent year here. We started the year down. Well, I guess it gave back. Remember the bad earnings report right off the hop, and then it had the parabolic run from 980 all the way up to like 1230. Put 2-3 tops up in the 12 and a half, 1230 area, and then kind of cascaded through the 11 handle. Well, we're getting back up to the 11 handle right now at 1126. Brent, you got anything on that one?
You know what? There was a price target increase from Goldman Sachs on Alcoa from $12 up to $15. They are maintaining a buy rating.
And my inside sources tell me that Ford is just buying up the aluminum market everywhere, so they can make these F-150s.
Actually, that's exactly what the Goldman Sachs note
Really?
said. Yep. How did you read it? You read the
No,
note,
I did
huh?
not read that. I did not read that. Is that what Goldman said?
That's really what they said. Yeah,
You
they
should
said
be a
it.
Goldman analyst.
They
Joel.
said it's the tip of the iceberg.
I'm going.
Wow.
I'm all in. I'm all in. I'm going to mortgage my house and buy Alcoa today. And Ford.
And Ford, you're picking bottoms in both of these, eh? Because Ford, man, you can pick bottoms all you want in this one. This thing, for the Ford chart was interesting. I kept thinking they were going to get a pop with GM because GM started to take off there a couple days ago. Remember, I put the pair trade on. I actually went long Ford and short GM. Well, I made it on the GM side because GM came all the way back down. So Ford did not go, and GM came all the way back down there. So interesting. But Ford, if you look at the charts here, we do have pretty decent support you're coming into here if you get back into that mid-14 area.
I hear that even though this new F-150 is going to be a little bit more expensive, I hear that the lighter frame is just going to revolutionize the gas mileage in these things. It's going to get like 87 miles per gallon or something like that.
So you're all bullish in Ford.
I'm all
Is that what you're
bullish
telling me?
Fords. Yep. Ford and
Joel's getting
Alcoa.
there. He says this is the bottom. Ford and Alcoa. These are the stocks you gotta own. DJ's piping up in the chat there. You want to talk about BWP from yesterday, and holy cow, Brent, do you got the story on this thing? This thing got absolutely crushed yesterday. It closed at $24, and it went down to $13 yesterday. What did they say? They're never going to make money again, and they're not paying any distributions, or what did BWP say that obviously knocked this thing down 50% yesterday?
I think they cut their dividend. Yeah, I think they cut their dividend by like 80%. It's just I'm remembering it. So don't
that'll
quote
do
me
it
on
because these LPs, everybody's in those things for the dividend. That's basically your main investors. And when you cut it by 80%, so it looks like, just looking at the Benzinga wire here too, Boardwalk Pipeline Partners declares quarterly cash dividend of only 10 cents per unit. And I don't know what the dividend was before. Do you know where it was?
Let me check real quick. I think they had earnings actually yesterday too.
Well, that news came out overnight and whacked it down, right? I mean,
I see 53 cents was the prior distribution.
Wow, so 53 cents down to 10 cents.
How can
Those dividend investors don't like that.
I guess the pipeline or the well is running dry, and for that company, boy, holy mackerel, that is, I don't know, and I don't see how you can just kind of hop in here and just get really interested in the thing. I mean, 1279 was the low, 1301 close. I mean, it did have a similar kind of move though in the monthlies. Maybe if you want to go do your math here or find out what the news was back in May of 2010, it did a similar kind of dipsy doodle and did come back here, but perhaps wait to see if it can digest this news here and perhaps.
That's a flash crash, I bet you. I'm looking
Oh,
at
you
the
think
chart
so?
there. Was that the flash crash? I'm looking at that big bar down. Yeah, that was the flash crash.
Okay.
It went down to a penny. 1 cent a share. It went down to during the flash crash. So we know, like, some stocks, they obviously struck a lot of those trades from the tape. Anything that fell over 60%. That's the May 6th, the famous flash crash there that knocked that thing down. So really, if you strike that from the tape, which it really should be, because that was just an anomaly where you had all Accenture trading down to a penny and Procter and Gamble losing $20 in 20 seconds. It was just a mess, obviously, that day where you had no liquidity in stocks and everything just vanished. But if you take that trade away, this is as low as we've been in a decade.
Hey Dennis, real quick, we're getting some volatility in the S&P futures right now, right at 1800. Janet Yellen making her first testimony as the Fed chair. She's not really saying too much, reiterating strong support for the current FOMC policy. Says that bond purchases by the Fed are not a preset course. She's really not saying anything new, but nonetheless, a little bit of selling right here.
Yeah, we've sold off 4 points since she started talking, so interesting. And they usually sell it off when Bernanke started talking too. They just tend to sell these things off when the Fed chairs start talking here. Joel, what's the technical saying?
I'm still looking at the low and the close here. You had a low at 94 and a quarter in the pre-market. You had a close at 94.75. So let's see if they walk it down to there and see what happens at that level. Not looking for any kind of major sell-off until we get down through that level. So not liking what Janet's having to say. I mean, how can you really? How could invest? I think it's just people just trying to juice the market here a little bit. I don't. I mean, how much interpretations can you make over the long-term direction of the market by a couple statements by Janet Yellen here? So some shorts just trying to get a little action in the market. Right now, we'll see if just holds the close, and we'll take it from there.
SF Bright just saying she actually isn't speaking here yet. She's actually just her prepared remarks is what they just released. So.
Or maybe they're going. Remember the you Brent? You probably too young to remember this, but when they used to have the Greenspan briefcase theory.
Yeah, that was awesome. I love the briefcase.
Oh, I remember that.
Yeah, and like
the bigger the briefcase, the more likely they was to change interest rates. If it was a small briefcase, then they wouldn't change interest rates. It's ridiculous.
So I guess maybe with Miss Yellen here, they're looking at the size of her purse.
The purse indicator.
The purse indicator. Okay, we're going to take a quick break here, and we're going to have Nic Chahine on creating income with option spreads. So bear with us for one moment. We'll be right back. Welcome back, traders and investors. We have a special guest on Nic Chahine on creating income with option spreads. Nick, how you doing this morning?
Doing great. It's at the crack of morning here and on the West Coast. Looking forward to spending a few minutes there.
Okay.
We got you up early here, 5:30 in the morning there, so you're up early.
It's my MO. It's my MO. I'm the one that leaves the house in the dark.
Yeah, good. Okay, well, we've had an interesting week in the market. We had the correction coming down. Everyone, I guess all the buy the dippers were right here. We've had a rally back over the 1800 level. Seem to be getting a little bit nervous here as Miss Yellen prepares comments. But after this rally here, the nice rebound in the market, has it created any good trading opportunities for you?
Yes, I think if somebody had a thesis going into this recent dip, the dip gave them some clarity or at least shook them off of the thesis. Depends on how strong a conviction they had. Speaking of comments, you mentioned Yellen's comments. They just came out, right? Not too few minutes ago, we shed probably 5 points in the cash on the ES. But now we're recovering. So I guess we kept our pants on, even though she didn't back off a tapering. So that's a good sign there. I never thought that the gloom and doom scenario was there. All my followers, and every time I debate something, I don't see the gloom and doom just because my main basic for my thesis is are the world's Fed. If they change their tune and suddenly turn hawkish, then I get worried. But the tune is still the same, right? Haven't they told us over and again that they're going to be there for as long as the data tells us that we need them? So that's the main basis for me. So the dip was an opportunity. Obviously, I wasn't gutsy enough to go all in. They don't ring bells But I did nibble with some credit spreads with a few good names.
Which
On
ones did you get into there, Nick? Like, what were you
the,
looking at? What'd you get into?
the most hated stock for some reason used to be the most loved one. It's the behemoth. It's Apple. I nibbled on that all along. I had a couple spreads that got into some hot water, and for me, I'm very conservative. Even being a race car driver, I'm super conservative when it comes to money. So as soon as it gets some heat, I either adjust it, buy some insurance, take debit spreads instead, just to withstand the time, or give myself some time to be right. So Apple would be one. Google would be another one because it has a lot of people who like it. It's got momentum. The downside I saw limited, and sure enough, Apple held up a lot better in the sell-off. If you can remember, it had a couple of green days when we had super red days, and that was a telling sign. Also on Apple, the reason I liked it is because one of the Icon has been a supporter of it, but also a risk. What if he had raised his hands like yesterday? He did. He said, "Okay, I'm good," but what if he had said, "I'm good and I'm out"? So he didn't say that. So he said, "I'm good." So now he's going to shut up for a little bit, maybe, and not leave the company. So I liked it.
So
It has
how did you play that? You had the gap down after the earnings. They pressed it down. The $500 level was a key psychological level here. So if you don't mind, just give us kind of the particulars
yeah.
of the credit spread that you played, and then how you laid off your risk when you got a little bit nervous.
No problem. On the when it got down, I when I took some spreads, it was credit spreads. I even nibbled on some February ones. I can sneak them in. I try to avoid events, so I don't want to go into an Apple event which is coming up. So I wanted to sneak in a February credit spread, and I usually go down 2 to 500 from here. So that gives me 30 to 40 cents in premium on a credit put spread, for example. I didn't do any credit call spreads to turn it into an iron condor credit, just because I don't want to surprise. Oh, here's a new flying car, and then suddenly you're trying to hedge a trade, and you end up with a blow up on the top line. So I'm fairly confident to take a credit put spread. If I'm a little nervous, maybe I'll take a small weekly, maybe a 10% debit spread size to my credit spread that's a couple weeks out.
Okay, we got some traders in here. Just explain, so credit spread, so you're doing a credit put spread. Explain specifically, like a specific example.
Sure.
Which strike you buy, which strike you right.
Okay, that's a good one. Usually when you buy a put spread, you're negative on the company. You expect it to go down, so you buy an asset, and if the price goes down within the time allotted, then your asset grows in value and you sell it for more money. I do the opposite. I sell you that asset by saying, okay, Apple is 525. I'm comfortable. It's not going to visit 500 between now and the expiration in February, which is the 22nd. So I sell that premium and I collect it. That premium goes into my account as credit, hence the name credit spread.
Yep.
However, it's not my money until I'm proven right. So I can wait for time to eat away at the premium, and every day the premium gets cheaper for me to buy back, provided Apple doesn't come towards my price. And I can either let it expire for maximum gain, which I rarely do, or I can buy it back cheaper, say at 60 or 70 or 80% of maximum gain.
So you're selling, let's say, the 500 put. Are you buying one lower to protect yourself there as well? Is that where?
Yeah. Yeah, that's why it's a spread. So you sell one, you create risk. When you sell the 500, that means that if Apple goes through to 500, you're on the hook to buy Apple at 500. I told you I'm conservative, so I'd like to hedge my bet by doing the opposite and buying, say, the 495 and make it a $5 widespread.
Yep.
And that caps my risk at $5 minus the premium I collect.
Right. So, and then you're just looking to collect the difference, obviously, between the
Right.
5 points and whatever it ended up costing you, or whatever
Right.
whatever you collected. Yeah.
Yeah, and inevitably I get pushback on, oh my gosh, risk reward is not that attractive. You're risking so much money. Yeah, risk for me is a couple of ways I look at risk. Dollars at risk. How much money can I lose? And more importantly, really more importantly, is what's the likelihood of me losing money, which is what is attractive to me in credit spreads, because I can choose how far away from an accident I want to be. So, if I have a 90% chance, theoretical chance of it succeeding, then I'd rather risk more money safely than risk closer to the line, less money, have a better risk reward, say, at $520 spread versus a $500 spread where the risk reward is not as sexy, but I have a 90% chance of being correct.
Okay, so the markets rallied back here. The spreads moved into your favor. So you said, you don't let it go to expiration. You don't take the risk. So you're basically you peel out of it when you got what 60, 70, 80% of the value. Do you scale out of it, or you just say, hey, I'm out, and you take the whole thing off?
Well, it all depends. It depends on mainly how much time is left on the trade. If it gets to be pennies, I always buy it back. Say 5 cents, 7 cents. There's no reason to risk $5 over 5 cents.
Sure.
So I always buy it back. It seems like wasting $100 or $200, but over the long run, I learned that those $100 and $200 are very profitable. You get one blow up last minute. It almost happened to me a few weeks ago on the rundown when one day when Google took a tumble throughout the day. But if I take a spread today and within 2 days it's 40% of maximum gain and it still has 20 days left on the trade, I usually peel it off because I got most of my gains with 2 days and so much more time left. Anything can happen. I peel it off and I reset it a couple of days later, maybe. So, and sometimes if it's too big of a trade, I bank a little bit of it, maybe half, and leave the other half on. Or maybe I will, if price runs up, maybe I'll collar it do the opposite of a credit put spread and do a credit call spread to try and cap it. For example, so let's say I sold a Google 1110 credit spread, meaning I sold the put at 1110 and bought the 1105 put, and then Google goes up $5-10, and instead of closing the credit put spread, and I'm comfortable with Google not gapping up, I will sell a credit call spread, say at 12.10. So I'll maybe sell the 12.10, and I think they're only $10 wides on the February's. Maybe they are $5 now. And I'll do the opposite of the credit put spread, but higher up on Google above the 1200 to collect more premium.
Okay,
So
just
this,
one more for you here. I've noticed this Goldman Sachs really hasn't participated with the market in the rally at all, which is not a good sign. But I've always been one to kind of buy the laggards here. It's sitting on excellent support, and I was just wondering if there would be, if you're looking at this one, or if
yeah,
someone was interested in putting a trade on here, what would you recommend, or
I
what would you
like
be a
I,
possible
I
scenario?
Yeah, I like Goldman Sachs. I always look to go long it when it gets hammered. Yesterday or a couple of days ago, I was looking at it as like, okay, is it time for credit put spread in it? Maybe, so we can be bullish. A great name. Obviously, it's got a legacy, and I look at the 1 year. Usually, I look at fundamentals first, and if I like them, then I visit the technicals as a consultant and see if they agree with my thesis. And on Goldman Sachs, I looked at the 1 year chart. It looks not bad. It looks like it's at, it's come down quite a bit. It had a big candle not too long ago, red one, obviously with the markets, and it bounced back. And now it looks like it's coming back to a point where it could be attractive. But then I pull up the 2 year, and the picture is not so clear as to it being so bullish. So I opted to wait a little bit. So if you pull the 2 year chart on there, you'll see that it's coming up to a level from which it broke down big time in the past couple of years, twice, 3 times actually. So I want to wait a little bit to see how the whole market in general, all by itself, is not going to go back down there, I don't think. But if the market decides to go down, maybe Goldman Sachs also goes down with it hard. So I opted to wait.
Okay,
Is
great.
is
Little caution. Go ahead, Dennis.
is it concerning to you that this stock really, and some of the financials for that matter, haven't participated in the recent rally? Because we've popped here now 65 S&P points basically in a week, and this Goldman Sachs is sitting a buck off its lows. Even looking at some of the other ones, I know it's like Citigroup's popped a little bit, but this Goldman Sachs really hasn't participated.
Yeah, they haven't, but I think if you notice, probably, the media always covers one group or another. And not too long ago, the retail was, not very well loved. As a matter of fact, it was hated. And one group doesn't participate, others step up. The Nasdaq has been pretty strong, rallying from depth. So whoever sold off harder probably. I guess we have a changing of the guards from time to time. So it's not. I'm not of the mind that we always need the financials to rally. I'm always saying, okay, if the financials are not rallying, something else may lead us up.
Right.
I like, my consistent rabbit are the small caps, really, because they're more honest, just because of the sheer number and the size, and not one box can move the whole index. So I look at small caps, and they haven't been scary, but they haven't been leading up. So that's why I'm like kind of cautious on the whole thing. I am optimistic. I don't see gloom, but I don't. It doesn't scare me that the financials are not leading us up. We will need them to step up eventually. I think, like me, looking at Goldman Sachs, a little iffy on the market. If I felt better on the market, I will go along it. So the financials will participate then. If more like me, do the same.
Okay. All right. We've had Nic Chahine on, creating income with option spreads, giving us an outlook on a couple stocks. Nic, thanks a lot for getting up early, coming on our show, and we look forward to speaking to you again.
Dennis, Joel, it's a privilege.
Thanks, Nick.
All right.
Joel, what do you think of these credit spreads? Are you going to be diving in here and putting one on in GS? You were asking a little bit.
I know. You know what? I think I like his theory here. It's that 160 area. If the market doesn't hold up here, you get another leg down. Then this could be the weakling, and you could get another good drop. I'm just a little bit skeptical of this rally here up to 1800. So I think I'll sit tight. I think that Nick gave us good advice.
Let's talk about Tesla here, because yesterday, holy cow, Tesla made a new all-time high again. The stock is just blasted in 2 trading sessions from 180 all the way up to almost $200. Actually, overnight here, we did get over the key $200 psychological level. I think we got up to $200.25. Do you think we take it out in the regular session?
If the market stays green like it is, I think we surely can. 200.49 was the pre-market high. 199.30 was the high from yesterday's session, so we are staying away. I mean, staying below it right now. I mean, you just got to look at this. I mean, it's a psychological level, but besides that, I mean, really, what is there holding this back? It's had a real nice run. I did watch a little CNBC yesterday, saw that their used cars were going for more than some of the newer models that people just didn't want to wait. So, I mean, he talked about having good resale value. That was good news for the market. So, Tesla's back.
I mean, when you look at that weekly chart and you just kind of analyze it all too, 2013, obviously we were down at the beginning of the year, down at $35, $40, had the big run up to 185. And then the pullback, and it wasn't quite a 50% pullback from the move, but a significant pullback. Looks like about 40% there, Joel, down to 116. And obviously, just slow and steady for the last 2 months. And all of a sudden, it's back up here at the highs. I mean, I guess, we were looking this year like saying, well, maybe some of the leaders from last year will start to be the laggards, but it really hasn't been the case. The leaders from last year are starting to step up to the plate here again. And a lot of these leaders are starting to make new highs here again. And they look like they're the stocks that are going to take us higher again.
I mean, I also took a look at this Netflix chart, and I remember you talking about that on Friday, and you thought that if it could get through the 414 level, and sure enough, it did. So I mean, it's hard to pick a top in these stocks when they just keep going higher each day.
Yeah, you can look at it from a valuation perspective. You can analyze the balance sheets and the cash flow statements and everything all you want, but I mean, bottom line is momentum, and these stocks had it all last year. We thought they didn't in the first couple of weeks, and they were lagging, and then everybody's just jumped in. And this Netflix, again, making new all-time highs. Facebook here ticked up to new highs there 2 days ago. Actually, interesting, if you look at the Facebook, they're putting a potential double top there yesterday. Could not make a new high there yesterday. 64.57 was the high 2 days ago, and then 64.50 the high yesterday. So a little bit of resistance there on the Facebook.
Yeah, I mean, it's been moving higher, off the earnings. So looking at those two highs here in the market, we are trading up 37 cents here in the pre-market, but two highs, 64.49, 65.57 here. If you're, getting nervous about this thing or whatever, I mean, nothing wrong with locking in some profits if it breaks below 63.47. That's been the highest low that this stock has had on this incredible run. So let it ride. It's only 50 cents away from there, but we'll see. Market's looking a little bit weak here. If it takes out that 63.47 level here, you got some room down to get to Friday's low at 62.22.
We got Google here popping up a little bit in the pre-market too, which is up another $6 here today. There's always news on it. Google, a ComScore partner to real-time audience metric for brands. I don't know what any of that means, but it just means stock's going higher here anyways. 1186 was the high back on the 31st. That's pretty much the all-time high. I know it got up there to like 1194 in the pre-market that day when it was really popping up on the earnings. But what do you think here? We've obviously had the earnings. We popped up. We gave it all back with the big market sell-off, and then the last 3-4 sessions we've climbed all the way back. We're back up here at 1180 right now, so we're kind of right here at resistance. What do you think on Google?
You did a high pre-market at 1183.82, and then you have basically four highs in this, or excuse me, three highs in this 1182 quadrant. 1186.54 being the all-time high. Then next day 1181.72, 1182.40 here. So you split all those numbers, and that's a pre-market high, 1183.32. I mean, that's that's your resistance point for now. Kind of, rallying back up with the market here. I think if the market, if the SPOOs get back over 1800, challenge that pre-market high, 18040, this thing can rock and roll. The north coming back on the downside here. If if the S&Ps start to roll over here, you take out yesterday's low at 1169.02. That's $10 away from here. You got perhaps another 10-point drop to 1160.56.
We're going to get Marty Kearney here on in just about 4 minutes here. But just before that, I want to give you an imbalance update. I've actually been posting the imbalances on my Twitter feed, Triple D Trader. But if you look on the sidebar, I've been putting pre-market there. So on this page itself, on the options page itself, you'll see about 9:15 I usually post pre-market imbalances, and I'll do that again today. But while I'm on the show here, I just want to highlight a few pre-market imbalances that I'm seeing. General Electric with 300,000 shares to buy. Yesterday, that had a large buy imbalance too, opened right at the highs. And sometimes where you see, you're thinking it's naturally bullish for the stock to have a buy imbalance, sometimes the stocks will open too high or too low relative to fair value. And these pre-market imbalances can sometimes give you a tell that maybe this one's going to open up a bit too high. And actually, sometimes the play is to fade these opening imbalances. So big ones here this morning: General Electric with 300,000 shares to buy. Coca-Cola with 127,000 shares to buy. Here's an interesting one: AT&T 165,000 to buy, but Verizon 146,000 to sell. So that's always interesting when you get one going one way and one going the other. Any thoughts on any of these here, Joel?
GE, it's just kind of has recovered. Not a lot. I would just look at yesterday's high in General Electric and use that, as a level. GE is one of those stocks that, will hit a level a couple times before it busts through. 25.39 was the high yesterday. Going back, you had a high going back on the 31st at 28.39. If we open up that high into that area, I definitely would take a look at it on the short side. Also, two lows, kind of a tight range the last 2 days. Good support coming in at 25, but I don't think I wouldn't, short this thing at 25.20 or 25 and a quarter. I'd like to see if it could boost it up closer to yesterday's high to attempt a short.
What do you think of this AT&T and Verizon chart? Because the value investors are kind of licking their chops down here. The AT&T dividend yield is now 5.67%. The Verizon dividend yield is 4.5%. And I'm looking at the Verizon charts almost more interesting, because October we hit a low of 46.03, and then yesterday we hit a low of 46.18, and then 4 days ago we hit a low of 46.11. So this is finding huge support down here in the lower 46s. If we do open down in Verizon, I don't know if that's going to happen here, here because we still have a lot of time and those imbalances can get offset. But right now it's indicated that it could open down. Do you think this could be a buying opportunity for Verizon?
Yeah, this is I do like that support there. You also had some support back at 4603 and 4606 back in October here. So you are, if you don't take into account what the dividend is and whatever, you do have a little downside protection. Coming back, on the upside, if you're looking to purchase this thing on strength instead of weakness here, looks like if we bust above 47 here, we've had four highs between 47.88 and 46.98 here. So breaks above 47 here, you got a lot of open air up to
Yeah.
48.
Yeah, that 47 handle, there's not much in there. And the AT&T chart's interesting too because we took a couple days there. 32 was kind of holding, and then we took it out. And we went down to 31.74. But quickly that day, we rallied even that day. The next day, we could not take out 32 again. And now we started a little bit of a rally here. So I wonder if we shook, the weak hands out there when we did take out 32. And all of a sudden, I like it when I see those reversals happen. And, you might catch a few people that were even shorting it through there, and they're caught. And, obviously the 5.6%. It gets the value and guys interested here too, who are probably looking to pick bottoms. Do you think AT&T can turn it around?
I think I'd like to wait for this to get a little bit closer back to 32 than trying to buy it above 32 and a half. Before we get to our special guest, Marty Kearney, I just want to take a quick look at Wells Fargo for JH3 here. As we talked about, the financials kind of been a little bit of a laggards here. Wells Fargo has made a move up here, though. Is coming into a little bit of resistance. You had a high yesterday at 45.62, and then you had two other highs at 45.62 and 45.71. So, like to see it get through that area off the open, get back above the $46 level. If not, I could find us coming back down to the low 45s. So we're gonna take a quick break here. Get on Marty Kearney, director of this. Director at the SIBO and senior instructor at the Options Institute. We'll be right back with you. Welcome back, traders and investors. We have Marty Kearney here, who's director at the SIBO and also a senior instructor at the Options Institute. Marty, How are you doing today?
Doing well, Joel. Good morning.
Okay, so you're active at the SIBO and in the Options Institute. Can you tell us a little bit about the Options Institute, the classes or costs, open to the public, online classes available?
Sure. Yeah. Here's the deal. The institute was started 30 years ago. The option started 40 years ago. The institute started 30 years ago, and it was mostly pointed towards institutional customers, brokers, things of that nature, to tell them how options work and maybe they could be a use for their clients. And as more and more investors have gone the self-directed route, that's kind of the switch that the Options Institute has done. So we have classes for individual investors. We have 100 online webinars that people can get for free. I deal with the brokerage firms and their trading desks, things of that nature. I do little radio things like this. I've been told I have the face for radio, Joel. I don't know what that means, but I don't think that's good.
I get that comment
But
too.
do you? Yeah, so we're all over the place doing. If customers are looking for it, we're happy. We're happy to oblige them. One of my fellows is down in Dallas today doing some training for a call center for a major brokerage firm. So we're all over the place, and investors are kind of flocking to the SIBO for some of their education needs, as well as the good job that the firms are doing with their sites, offering a lot of education.
Is there an address, a website address that you could give?
Just cboe.com is the place we send them to, and there's the educational site. You need to sign in with something saying you're over 18 or whatever the requirements are. But I'd say 95% of the material out there is free to investors, and they can kind of pick their own track as to what they think would be important for them, and away you go.
Okay, so you're also the co-director of social media. That's kind of probably a new role that's been created in the last few years.
Yeah.
How's that role? You've taken that on, and how's it
Yeah,
going?
I've got to figure out how these computers work. Fortunately, I've got a fellow here that helps me, and he knows a little bit more than I do about the nuts and bolts. We have the CBOE tweets out to a little over 750,000 people. We have information we put out on LinkedIn and Facebook and other avenues of that nature. We have a blog that we have 40 outside contributors. Almost a total of 40 contributors, about 30 outside and 10 internal here at CBOE. And if they have little musings about what they see in the market, and it doesn't necessarily have to be about options, but they give us information, we pass it along. So we're out there in the whole social media area trying to get the message out about options and what they can do for customers.
Okay, now let's get into the markets here. We've been in a kind of a sustained period of relatively low volatility. I mean, had a little bit last week, but it's kind of been slow and steady. Do you think that trend will continue?
I'm kind of undecided on this. This market is kind of held. It's now bouncing off some what had been support is now seems to be resistance up a little above 1,800 on the S&P. I think we will remain volatile, and I think this is where the volatility complex, whether it's VIX or other things of that nature, can kind of give people a good temperature as to what the market's doing, and make their trades accordingly. But I think volatility is here for a while. We have, as you said, Joe, we've gone through a kind of a level of lower and lower and lower volatility. But that complacency sometimes, is a precursor to a little bit more, not necessarily violent movement, but sharp movement higher and lower.
Okay, so you mentioned the term VIX there, and it's used a lot as catchphrase on CNBC and the other media. Could you just explain how it was created and what are the components that go into it?
Sure, Dolph. The VIX was created. We had investors saying, well, I know how volatile Apple's been or IBM or CVS that had earnings this morning. We can kind of see what historically they've been doing and what the options are telling us the implied volatility is of the marketplace at this instant in time. But how volatile is the market? So we originally did this with OEX, and now we do it with S&P 500 options, the full-size SPX options. And the computation's a little different, but we put the first 2 months into a blender and come up with a constant 30-day maturity. So we probably have something expiring somewhere in the ballpark of about March 12th. And we take all of the options in the front 2 months that have a bid in the SPX, and we put them in a second blender. This is all down in the basement of the CBOE. and we come up with a constant at the money option. So if the S&P is 1797.30, it's the 1797.30 strike price expiring 30 days from today, and it's updated every 10, 12, 15 seconds. So it's a real good idea. What is the implied volatility of the options that the marketplace is measured by the S&P 500? They're saying this is the temperature of the market at this instant.
Okay. Now, the CPO has a new product coming out on February 13th, short-term volatility product. Can you tell us about how it works and just compare that with the regular VIX?
Sure. The volatility, the further out in time you go, the market isn't as sensitive to price movement, sharp price movement in the underlying market. So that when we're taking a look at the VIX, we're looking at the volatility looking 30 days out. And what a lot of traders and investors and a lot of professionals said is the VIX is a good measurement of market uncertainty, but you know what? We need something a little bit closer into what's happening today, what's happening this week. Janet Yellen is speaking a little later today. So we came up with a short-term volatility. The symbol will be VXST, Victor X-Ray Sierra Tango. And we're going to have futures on that starting this Thursday, the 13th, and we'll have options on it in the next 2 months or so, 2 or 3 months or so. But this is going to be, we're going to be looking at not like the first month and the second month. We might be looking at the weeklies. We might be looking at the first week and the second week in the SPX complex to find out what is the marketplace saying right now. And the VIX, as the VIX went up last week, we have historical data at cboe.com if people want to go there and take a look at it. Or they could email me. I am Kearney at cboe.com, Kearney. But there is data there at cboe.com saying the VIX spiked the short-term VIX spiked much higher in this last little market correction, and it came down much sharper than the 1-month VIX did when this market seemed to gain its footing and kind of creep back up towards 1800. So I think this is a product that will be somewhat complementary to the VIX, but I think it's going to be a very short-term product. People will be into it. They will be out of it very, very quickly.
And how can the retail investor make use of this product? So they use it as like if they're trading the weekly options as a hedge or just as an overall hedge against their portfolio, or do you look at it as a intraday trading tool?
I think it's more of a hedge. I think one thing that I think investors have to be aware of is that unless they are really strongly an intermediate level trader or above, and perhaps they even have a little bit of experience with futures and futures option, if they're a beginner, I don't think they should be trading the VIX. I really don't, and I work here. It's one of my products, but it's an unusual product because as the markets go down, volatility tends to increase. We see people hedging portfolios not with puts on the S&P or the SPY or the diamonds or things like that. We see them hedging portfolios with call options and futures on the VIX. So it's a very different product. It expires on a Wednesday. It's an AM settlement option. So you don't trade it that last day. It settles on a Tuesday, or the last day to trade is on a Tuesday. It settles on a Wednesday morning. It's European style, so there's no early exercise. So there's a few things I think people should be aware of before they, jump right in and try to do something with the VIX. And the VIX options, Joel, as you know, are not based off the cash VIX. They're based off of that particular futures product. So you might see the VIX trading at 15, but the future might be saying, well, we're at 16, so the options are based off of the future at 16 rather than the cash at 15.
Did you say that they're going to have a Wednesday expiration?
Yeah, VIX expires on a Wednesday, every month. It's 30 days before the regular expiration, right, because it's a 30-day product. Now, VIX expires in February. It expires next Wednesday, the 19th. So the last day to trade February VIX is Tuesday, the 18th, because on Wednesday morning, the 19th, we get a settlement value, and then that's it for the product in that particular month. So VIX is the only product that doesn't have a Friday expiration. It expires 30 days before a regular expiration, which happens to be a Wednesday.
Okay. Now these weekly options have just we've talked to it with some few of the higher ups at Options House, and they've been producing some good opportunities for traders. Are you guys going to be rolling them out in more stocks, or what's the plan for the
Yeah, the
weeklies?
weekly. I heard Steve Clausen's interview on the pre-market. It was a great one last week. The weeklies, there's a moratorium right now on adding more weekly products. It's still called a pilot program, which means it's not official. But puts were a pilot program for over 5 years, believe it or not. So once these things, it's the camel with the nose under the tent. I think they're here to stay. But the weekly product has been very popular with investors. I've talked to heads of different brokerage firms, and they tell me that on an average week, sometimes it's 10 to 20% of the volume is people doing something with weekly options. A lot of it having to do with corporate events like earnings, product announcements, things of that nature. Some of it having to do with hedging something a little bit further out in time. I might have some April options. I might hedge those with something on a weekly that expires, a week from Friday. So we have gone to what we call extended weeklies. There are a good number of stocks like the Apples of the world that it's just not the option that expires this Friday, Joel. It could be the next 3 or 4 consecutive
Right, I
Fridays.
have seen that. Right.
So, and that's a nice way to say, you know what, that 1 week option just doesn't have the premium if I'm selling it. But if I go out to that second week, I get a pretty good bang for my buck. So maybe that's the one I'd like to sell. So anyway, there's a lot of popularity with that product, and will we expand it? I'm not sure. I would think we would, but at this point in time, there's kind of a moratorium on the amount of weeklies we can have out there.
Is it just they lift the moratorium when they lift it, or is there like another date where it's up for reveal?
Well, you know what they do right now, Joel? For example, let's just say, and I don't know if this is true or not, but let's just say that CVS was on the weekly list this week, okay, because it had earnings today. But next week we might not need next week's regular expiration. But the following week we might not need CVS. We'll drop CVS perhaps, and we'll add, Consolidated Lint, the stock that Gomez Adams used to follow on the Adams family, because they have something coming up in the next week or so. So we do have some flexibility with the weekly options, and so far it's worked out pretty well with our flexibility. But at this point in time, I think it's an SEC. Limit that all the exchanges have, and I'm sure that one or more of the exchanges have requests in to add to the product, but I wouldn't expect it in everything. Kind of like, Joe, the way we don't have leaps in everything. We've only got leaps on about the top third of the stocks. It doesn't make sense to have leaps on everything. It might not make sense to have weeklies on everything if the options really don't trade that well.
Right. If it's not there. So, all right. So we've talked about a lot of the details and some pretty complicated stuff, but we do have listeners that are just getting into the options markets, and obviously you're a trader on the floor and you learned about them probably through the school of hard knocks. What the stuff on the SIBO, you have that. If someone was getting interested in options today, what's the best way for them to go about learning options?
I think listening in on calls that I know Steve Clausen, for example, and not to push Option House, but he has webinars every other week or so on topics that customers want to talk about, and they let customers know, and if it's free, and you can sit in and fire questions in and learn that way. Of course, the CBOE has things as well. You can do paper trading. I think we have some arrangements with 3 or 4 brokerage firms where you can actually put some money in and fake money, okay, and actually put some of these strategies on in different stocks. I think, though, Joel, that until you actually trade your own money, as soon as you start trading money, you learn very, very quickly, okay, probably as you're well aware, too. But I think you don't have to trade 5 or 10 of something. If you want to try a strategy, know what your risk is, know where the break-even is, and put it on 1 or 2 or 3 times, okay, and see how it goes. I know I started out, Joel, years ago. I had a real job. I worked for a real company, believe it or not, but before I'm doing what I'm doing now. And I was buying company stock. Someone turned me on to the idea of doing the covered call. Now, it's a pretty boring strategy, but I did it. I learned it. And then I said to my broker at the time, I don't have enough money to buy stock to do this with other stocks. And he said, oh, then maybe you should do a vertical spread. Okay, buy something in the money that kind of looks and acts like the stock. Let's sell something shorter term against it, out of the money, and I kind of got into spreading as my second strategy. So I think you can watch the seminars and things of that nature, but until you actually put a position on with a strategy you somewhat understand, you're not going to make that next step up the ladder.
You used a term there. I'm sure a lot of our traders are familiar with it, but could you just explain the covered call real quickly?
Yeah, the covered call is very simple. And by the way, you can do this in a retirement account as well. If you have 100 shares of XYZ and it's trading at $50, you might say, hey, you know what? I like the stock. I'm somewhat bullish. I'm not overly enthusiastic about the stock, but I'd be willing to sell that stock at a certain point up to a certain period of time. So maybe I'll go out to March and sell a March stocks at 50. I'll sell a March 55 strike price call, and let's say I pick up $1. Okay, that's $1 per share. Each contract represents 100 shares. So I collected $100, but I have an obligation, if called upon to do so, to deliver those shares at $55 per share. That's 10% higher. If nothing happens, the stock doesn't get there, the option expires, you get to keep the money. If the stock does go up, you have two things you can do. You can either accept delivery. There was a popular strategy, Joel, years ago that you may be aware of. It was called buy low and sell high. Do you remember that strategy?
I didn't get that memo.
Yeah, I think okay. Well, I'll talk to you later about it. But anyway, you can either accept delivery and now you're back to cash and you got out at the target price you established, or you could say, you know what, I'm actually kind of bullish on the stock. Guess what? You can buy the option back. Okay, and you can either sell a different option or you can do nothing and just be a regular old stockholder. So there's no margin on this if you own the underlying shares because you're putting up the stock as collateral. And as I said, it's considered to be a pretty conservative strategy. You're allowed to do this in retirement accounts because you're putting up the stock you own as the collateral. So covered call, very basic strategy. We actually, Joel, have some done some studies on the covered call. I consider it one of the most boring strategies you could ever hope to get into in the option world. But we have some studies that we started out doing with S&P 500, doing a covered call every month. It's called the BXM. It's the Buy Right Index. And in a lot of markets like we're having right now, it is way overperforming the market because you're bringing in premium. There can be times if the market, spikes higher, you could be underperforming. Okay, but for the most part, the studies we've done show that covered writing works and outperforms just buy and hold.
Okay, wow, what a thorough explanation of that. So, all right, I'll throw one more out here, a curveball here, and I know that you work for the SIBO, but let's.
I could never hit a curveball, Joe, or I'd still be in the bigs, right? But go ahead. Okay.
Okay, so let's say a new investor has some discretionary income here, and let's say $10,000, and they really like a stock. Okay, and and they like it long term. They're willing to risk the money. I mean, just point out the advantages of using the options market to invest in the stock as far as leverage and time,
Sure.
as opposed to outright purchasing the issue.
Sure. If someone owned, or if someone had $10,000, and hopefully they're not putting all their $10,000 into one particular product, whether it's a stock or an option. But if the person said, "Here, I have $10,000. I like the stock. It's trading for $50 a piece. I could buy 200 shares." That's where I say, there are multiple strategies we could get into, and we don't have time. But what I would say is, look, why risk the entire $10,000? And as in the leverage part, you mentioned, Joel. Why don't we do this? Why don't we buy a 6 or 8 month call option? If the stock's near 50, just for fun, let's buy a 50 strike price call. And let's say we're spending 3 points, right, for each option. So if we buy 2 options, we have the right to buy 200 shares at 50 anytime between now and September or whenever it is. We're risking $300 per contract. We're risking a total of $600. If the stock goes from 50 to 40, we could lose 100% of our investment. But we only lost 3 points, right? On the move down, we didn't lose 10 points if we owned 100 shares, or 20 points if we owned 200 shares. If the stock goes to 60, and I've actually had that, Joel. I've actually had stocks that went up, believe it or not. But if the stock goes
I thought
from
they
50
all
to,
go up. I thought they all go up.
Well, they're supposed to. That's the plan, right? When you watch TV on the talking heads here. But if the stock goes from 50 to 60, if you had owned the shares, you would have made 10 points. If you own the 50 call, With the stock at 60, the 50 call is worth 10 points, but you paid 3, didn't you? So you're only up 7. So which was better? Well, you would have made more money with the stock, but you risked 5,000 to make 1,000, right, per times 200 shares. If you did the option, you risked 300 and made 700. All right, so that's where you get the leverage, limited risk and leverage. And you've got your money. If you had 10,000, you now have $9,400 in an interest-bearing account. Hopefully interest rates are somewhat above 0 after Miss Yellen talks today, right? But the whole idea here is I don't want to risk everything, and I'd like to get some leverage and still control the stock. Now, you don't get voting rights. You might not get a dividend. If there is a dividend, and that's something to consider too, but that's pretty much priced into the price of the option.
Wow, Marty, thank you so much for coming on the show. You make the options. You could write a book, Options for Dummies, because like dummies like me understood everything that you were saying there, and I hope our participants in the Options House chat room got good information out of this. Thanks so much for coming on our show
Thank you,
today.
Joe.
And Marty, I sure hope you can find some time in your busy schedule to come on again.
I'd love to. And say hi to Dennis for me. Thank you very much.
Okay. All right. Thanks.
Okay. Thanks.
Mighty Joe Young.
I was going to say, Dennis, if you're out there listening, Marty says hello. I mean, I never get a shout out on the show because anyone wants to talk to me, but of course he wants Dennis to know that he's appreciated.
He what a great guy, man. It's just like he's the kind of guy I just like to go out and have a beer with,
Not to mention a great radio voice,
Yeah.
which we only have one of those here. It's mine.
Oh, okay.
No,
All right.
no, just kidding. It's Jake's. Today's editorial headlines from around the globe. General Motors will pay CEO Mary Barra compensation worth about $14.4 million this year, or about 60% more than the 2013 compensation of predecessor Dan Akerson. GM on Monday released details of Barra's compensation about 2 months ahead of the schedule to rebut criticism that she was being underpaid because of her gender. Last week, politicians and commentators criticized GM for supposedly not paying Barra enough because she's a woman. Joel, I believe you just ended our Skype conversation. Just going to get that back up there. After designing driverless cars, experimenting with robots, and secretly building a fleet of barges, Google is taking on a new challenge, running an airfield in the heart of Silicon Valley and restoring one of the area's most iconic buildings once used to house Navy blimps. On Monday, federal officials announced that they have chosen a Google subsidiary to restore the landmark Hangar 1 at Moffett Field and assume control of the airfield's 2 runways, located just a few miles from Google's main offices. The move comes amid a Google expansion binge. In recent months, it's leased several office buildings in nearby Mountain View and Palo Alto, while planning to construct another new campus from the ground up on a different portion of the Moffett property. And Google's 3 senior executives also have a deal through a separate company to park their private jets at the federal airfield. Google's plans for the Moffett airfield are unclear, although the agreement could allow limited commercial development or possibly a museum or education center at the hangar site. Alibaba Group is set to launch a U.S. e-commerce website through its subsidiaries Vendio and Octiva, which are in turn part of the Alibaba.com business group, the company told Reuters on Tuesday. The 11main, or 11main.com site, is an online shopping business that offers interesting quality products from hand-picked shop owners, such as fashion, tech, and jewelry goods. Alibaba has been ramping up its international expansion with various acquisitions, including leading a roughly $200 million investment round in U.S. retail site ShopRunner Inc., setting up an investment division in the United States, and offering more of its e-commerce and online payment products overseas. A court-appointed monitor evaluating Apple's antitrust policies can resume his work, but must adhere to the strict limits on his duties spelled out by the judge who appointed him, a federal appeals panel said on Monday. A 3-judge panel of the Second U.S. Circuit Court of Appeals in Manhattan issued the order after hearing oral arguments last week on Apple's request that the monitor's work must be suspended until the appeals court decides whether it was proper to appoint him. That ruling could be months away. The order allows the monitor, Washington lawyer Michael Bromwich, to resume his duties after they were suspended for several weeks while the appeals court considered whether to grant Apple's request temporarily. A Manhattan judge appointed the monitor in the fall for 2 years after concluding Apple colluded with book publishers in 2010 to raise electronic book prices. A knowing laugh went up in the crowd when comedian Nathan Fielder walked out of the dumb Starbucks in Los Feliz on Monday evening in a green apron adorned with the mock logo. Dozens of people were still waiting in line for cups. Beverages were no longer being served as Fielder began a tongue-in-cheek news conference outside the store in a Hillhurst Avenue strip mall. Firstly, I'd like to thank our customers, neighbors, and the community of Los Feliz for embracing my independent coffee shop with open arms, he said. Obviously, running a business is hard, especially a small business, and we've encountered some major pushback. Fielder, whose Nathan For You show airs on Comedy Central, told reporters and dumb Starbucks patrons, that's the company name, not dumb Starbucks people, who filled the strip mall parking lot, that he has always wanted to own a small business. Capitalizing on Starbucks' corporate name really helped this one take off. As for the legality of the shop, the comedian said he doesn't need permission to use Starbucks' logo because he's operating under parody law. Though he said the corporation hasn't contacted him personally, they have made statements through the media. Illinois will partner with satirical site The Onion in an effort to attract young and healthy residents to purchase Obamacare coverage. The Onion has agreed to run 3 banner ads promoting Get Covered Illinois, the state's Obamacare exchange. The Onion has also agreed to create a video, an editorial, and a custom news section about Get Covered Illinois, and will display the ads until March 31st, the deadline for the first Obamacare open enrollment period. All the products will be produced through the exchange's collaboration with The Onion, the Chicago Tribune reported. The Onion ad buy is just $150,000 of the state's sizable $33 million deal to market Get Covered Illinois. The president's home state opted to run a partnership exchange with the federal government, and the Get Covered Illinois website sends potential customers to healthcare.gov to purchase coverage. And on the eve of the biggest union election in Chattanooga in a generation, a conservative anti-tax group labels the union trying to organize the Volkswagen plant in Chattanooga as the United Obama Workers, and warns that a union victory this week by the UAW could sow the seeds of a more liberal, Democrat-leaning Tennessee. Union supporters counter that right-wing Republicans are trying to keep the UAW out of the South for political gain. Some of their leaders on Monday threatened to withhold tax incentives for future expansion of the 3-year-old assembly plant in Chattanooga if workers vote this week to join the UAW. About 1,500 workers will vote from Wednesday through Friday in an election that the National Labor Relations Board will conduct. The company plans to expand in Chattanooga or at a Mexican plant to produce a midsize SUV. Overall, Volkswagen intends to invest about $7 billion in North America over the next 5 years to achieve a goal of selling more than 1 million Volkswagen and Audi vehicles in the U.S. by 2018. Shirley Temple, star in a series of winsome films that lifted the spirits of millions during the hard days of the Great Depression, died surrounded by her family at her home in Woodside, California at the age of 85. Temple was the most famous child star of her time, and arguably of all time, beginning her film career at age 3 and becoming the symbol of upbeat family entertainment during an era when many had little to smile about. By 6 years old, she'd received a miniature Academy Award and left her hand and footprints in cement at Grauman's Chinese Theater. She retired from acting at age 22, married twice, and gave birth to 3 children before venturing onto the political stage, serving as U.S. ambassador to both Ghana and Czechoslovakia, a U.S. representative to the United Nations, and chief of protocol in the administration of President Gerald Ford. And today's trivia tidbit: on this day in 1937, after a 6 weeks sit-down strike by GM auto workers at the Fisher Body Plant No. 2 in Flint, Michigan, GM President Alfred P. Slogan signed the first union contract in the history of the American auto industry. The strike was organized by the UAW, which wanted to be recognized as the sole bargaining authority for employees at GM factories. The UAW, founded in 1935, also demanded improved working conditions and job security for GM auto workers. At the time of the strike, GM had been the world's largest automaker since the early 1930s. And today's trivia questions, everyone on your marks: what former UAW leader has a major highway in Metro Detroit named after him? Anyone got your Detroit local trivia?
I have this one nailed.
Do you?
Yeah.
Okay.
Should I let anybody else guess?
Let me see if there's any guesses coming out of the chat. Shub's posted in there.
It's not I-94. It's not the 9-fold.
Today's trivia question: what former UAW leader has a major highway in Metro Detroit named after him? Boop boop doo.
It's not Lodge. It's Walter Reuther.
I didn't end the period of time to guess, Joel, but it's okay. It's all right. It's fine. Because you are correct, sir. Interstate 696, or I-96 as we refer to it most adoringly, is an east-west 28-mile auxiliary. The state trunk line highway is also known as the Walter P. Reuther Freeway, named for the prominent auto industry union head by the Michigan legislature in 1971. I-696 is a bypass route detouring around the city of Detroit, although most rush hour times it's basically a parking lot, through the city's northern suburbs in Oakland and Macomb counties. Reuther was an American labor union leader who made the United Automobile Workers a major force not only in the auto industry but also in the Democratic Party in the mid-20th century. He was a socialist in the early 1930s and became a leading liberal and supporter of the New Deal coalition. That wraps it up for me today, ladies and gentlemen. Just a reminder that the show would not be possible without our dear friends at Options House. They'll give you 150 commission-free trades if Joel stops breathing into the mic.
I can't.
Nope, just kidding.
I can't. I had it on mute for most of that, and I wanted to answer the trivia question.
Oh, man. So, anyways, if you click on one of those buttons at the top and the bottom right that say Options House, get 150 commission-free trades, you can sign up for an account, get those free trades just because you listen to Benzinga's pre-market info. Who am I giving it to? Where's Brent? Brent's around.
Here I
there
am.
he is. I see him. I see him now.
Oh.
So, I was going to guess that it was going to be Davison was the freeway.
I would say
But
it
I
also
guess
is a good
Metro
guess.
Detroit would have given it away.
You didn't even know that, Joe?
I didn't know that because I didn't know who Walter Reuther was.
Joel, you think Alex Trebek knows all the answers on Jeopardy?
He sure acts like he does.
Well, I acted like I knew it too because I asked the question.
Okay.
We are
What do you got for
open
us,
for
Brent?
trade.
Open for business?
Yeah, maybe get a quick update on the S&P futures, Joel.
Yeah, we had a yelling sell-off there, but really not much danger. Didn't even get to the pre-market low at 94 and a quarter. We stopped at 95 and a quarter, so still holding above the close. Looking good to go north here.
Alrighty. Let me hit everyone with a couple of the top upgrades and downgrades, then I'm going to hand over to Jake really quickly. We got about 10 minutes left in the show. Shares of Constellium, that is Charlie Sandy Tango Mike, added to Goldman Sachs conviction buy list this morning. That one should definitely be moving on that news. I see it up about 2% right now. Citigroup upgrading shares of Boardwalk Pipeline BWP to buy. Atlantic Equities upgrading shares of Ralph Lauren to overweight. Maxim Group upgrading shares of Allscripts to buy. Jefferies upgrading shares of Finisar to buy. And Bank of America upgrading shares of Steel Dynamics this morning. On the downgrade side of things, Morgan Stanley downgrading shares of Sohu. Sandy Oscar Hotel Uniform is the ticker there. Seeing that stock down about 3% this morning, trading under that $70 level. And then a couple at Raymond James in the home building sector, downgrading Lennar from strong buy to outperform. And then this one's a little bit more convicted, downgrading KB Home, ticker Kilo Bravo Hotel, from market perform to underperform. And then one more from Raymond James actually this morning, St. Jude Medical downgraded to market perform. Seeing 3 downgrades on shares of Infoblox following that guidance last night. Blocks is the ticker with an X. Wedbush downgrading, Stern AG downgrading, and also Needham downgrading. And then we have a downgrade on shares of Insmed this morning. India November Sandy Mike downgraded a couple notches here at Wedbush from outperform to underperform. And the last downgrade this morning, Citigroup downgrading shares of U.S. Steel to sell. Ticker is X. Maybe that's just a good spot to start the charting here, Joel. I know we talked about U.S. Steel a little bit before. How did it open?
It opened okay here. We were talking about the $25 level. There had been support, and that did take it out in the pre-market. But in the regular session, 24.98 opened 25.06, ticked 24.98. and then rallied a stick up to 26.05. Stopped a penny short of Monday's high, which was 26.06. So this thing will just probably flounder at 25.5 for the rest of the day.
Well, Joel, welcome back. Glad to have you back on the show.
Yeah, I caught you a little bit. I slept. I did the old 12. I slept for the cycle yesterday, and I got up at like 9:15. I'm like, I'm missing pre-market info or pre-market
prep.
Oh yeah, excuse me.
Of course.
And I
It's
got
been
in,
a day, you know. He gets a little rusty.
and I got in, and I heard you and Brent Brent sounded like a chartered financial analyst there. I
Wow.
mean, he was like talking. You mentioned something, and he's like, "Well, I think if it goes through 72, I think he's been listening to me and learning stuff over there. I'm proud of my boy, Brent."
Rubbing off on him, all right.
All right, but I want your obscure stocks for the day. Or are you going to talk about some ones we know about?
No, here's an obscure one for you. I'll get that started. INSM, India, November, Sandy, Mike, for anyone on their own charts. It's Insmed Incorporated. It's a small NASDAQ pharma company, and it caught a downgrade from Wedbush this morning, and it's getting hammered on the news. They had announced a contract to have one of their drugs produced by another company via SEC filing, which seems, like a positive piece of news. But Wedbush just so happened to drop a downgrade today, saying that the lung cancer trial on this one is basically there's way too high expectations for it. They slashed their price target from $18 down to $7, dropping it from an outperform to an underperform. So it's a drop in 2 notches in ratings and an $11 drop in price target. So the shares are down about 11% right now. They're just getting crushed in the session. Nowhere near that price target that Wedbush issued, but definitely seems to be scaring a lot of the traders out of this one.
How would you like to be a broker at Wedbush? You got your client into this.
Oh man.
I got a call. That brokers will make you broker. 1696 open, dip to 1650, and now you're getting a little bit of a reprieve back to the $17 level. I'm not sure what they do. I'm not sure the company that they're doing business with here, but you did have a lot of support in the 1650 area. You had a low at 1645 on December 24th, so I'd keep an eye on that level. Below that level, you got a lot of air back down to under $16. Coming back on the upside, 1753 is a long ways away from that 1860 low from yesterday. This is, trade by appointment only stock here. So if you're, it did trade 300,000 yesterday. It's traded 400,000 today. So you can either look at a situation as getting a little rid of some weak longs here. But boy, what a major change in rating, boy.
Absolutely. I mean, it was just a really radical change, and it's not exactly a big enough company to really show up on a lot of radars. It just really interested me to see it get knocked down so heavily. Obviously, pharma names are really volatile, and with its recent rally, I mean, I'm looking at the early 2014 for it. It's shown a lot of strength, and Wedbush really acting like an axe in the name. But another one I want to look into is a more familiar name to us, and that's Canadian Solar, Charlie, Sandy, India, Quebec, CSIQ, for anyone following along on their charts. Company issued some guidance this morning and announced a 2.6 million share offering. The guidance was not so hot. They're guiding 510 to 520 million in revenue for the fourth quarter. That's in Canadian dollars, versus the 556 million, which was projected by the street. So that was causing shares to kind of take a hit this morning. They're down almost, was that 2.5%? Not quite that. It looks like they're kind of recovering now. Recovering since the open at least, but still down below the $40 level. Kind of interesting, and I know you'll probably want to go into this, but yesterday we touched that $40 level a couple times, but couldn't really break through it. And then, you have the lowered guidance, and that's kind of, I don't know, seems kind of like a semi-bearish signal in the short term for me.
Yeah, you always talk about this stock is kind of like the stable Mabel in the solar sector.
It's one of the more stable ones, I would say. While First Solar is kind of like the best in breed, I guess this is the one that I kind of like to look at as maybe second best. I don't know. It's just one that I see it moves a lot and seems to make sense when it moves, rather than some of the Trina Solars or whatever. They'll move 30% in one direction when they don't have any news. So
They did knock it down here. I mean, the news. You said there was a secondary, correct?
Yeah, 2.6 million share offering. They filed for it. They haven't priced it yet. So obviously there's still some news to come. Will they price it at like $38? Will it be $39? I guess that will really kind of determine, where this stock ends up. So.
Right. It kind of acts as a magnet, so we'll wait for that second. I'd say right now it's going to probably come out around the $38 level. You did hit a low earlier in the session here wow, this thing's had a huge, am I looking at a daily here? Wow, this thing's had a huge range. It opened up at 36.50. Is this right? 36.21.
Sounds right.
Hit 36.21 and rallied back all the way to 38.65. Wow. It missed filling the gap by 30 cents. I'm looking at this chart and I'm like, wow, that must be like a 15-minute, or excuse me, like a weekly, but it's actually a daily. If you were using your cursor and you were looking at the 36.17 low that it had on February 6th, or the 36.20 low that it had on February 4th, you would have had to step it up a little bit because it got to 36.21 and then just got a great rebound there. So, wow, nice buy off the open there if you could have caught it. Probably hit some rough sledding here between the 38.65 high that we've hit and to fill the gap tomorrow to 38, or from yesterday's low, to 38.95.
The last one I want to look into real quick before we move back to the futures is Mosaic. They reported earnings this morning. That's Mike, Oscar, Sandy. EPS came in at 36 cents, was expected 43 cents, while revenues came in at 2.18 billion, missing expectations of 2.54 billion. Keep in mind this is one of the potash providers, so they've been really volatile. I guess it was it 2 months ago or so, Brent, when they were really volatile, and we haven't been following them as closely, but it looks like this may be bringing them back into play. So that's Mike, Oscar, Sandy for anyone on their own charts. Joel, what do you think of this one?
Well, it finally got up and filled the gap that it had from its trading back in end of January, where you had a 48.05 low and a 47.81 high. You went up and you filled that gap. Now you're back down under the $48 level. So look for resistance to rebuild back in the lower 48s. If you can make a new high above that 48.17 high, you got some real estate to go to 48.78. But looks right now it's trying to back and fill a little bit.
The one peer play here is called Potash Corp. Papa Oscar Tango Pot is the ticker there. It's kind of moving to the upside right now. Any thoughts on that one real quick before we kind of take a look?
Nice chart, Jake. You did that last week with, what was that, 20th Century as Fox?
Yeah, I think so, yeah. Yep.
Yeah, he called it was like a quadruple top at 32 and it blew through there. Well, you got a similar situation here in shares of potash, and no, J Dot is not a pot stock. 33.86 is the high. That splits the highs from the last two sessions at 83 and 89. Break above there. If there's not any size at 34 in the issue, 34.15 is a minor resistance point, and then major resistance up at 34.78. So nice spot there on the potash. Moving on to the S&Ps here. Got a little nervous Nelly selling on, I don't know if it Yellen walking into the building or whatever it was. We sold off, couldn't get back down to the close or the pre-market low. We got a nice bounce going. I guess your target on the upside would be this pre-market high of 1804.50. Really, if you look at the dailies here, there's just not a lot in here. We had a big vacuum down day from the 1820s, so perhaps play the ranges as the market's a little bit nervous with Miss Yellen doing her testimony here. Keeping it high on the 1804.50 high. So glad to be back with you guys today. Feeling better. It's a lot better than staying home and watching the Olympics, and be back with you tomorrow.